Hey there, and welcome to another tutorial where we'll look at the TDI, the Trader's Dynamic Index, how to use it for trend detection, crossover signals, and breakouts. Also, overbought, oversold for exits. If you're not familiar with the Trader's Dynamic Index, I've included a link to the Spotlight post below for additional information. And briefly, you have these crossover signals that you see here. Green line crossing the red line, price versus signal line. Another cross here. This one is easy to see, clear cross to the upside. And in addition, you have the so-called breakout signals. That's when the green price line is breaking out from the Bollinger Band to the upside, or conversely to the downside for short. So breakouts here, here, as well as here. And then you have the overbought and oversold scenarios. So when you see these shaded areas, you're above the upper threshold. So that's the 68 threshold as opposed to the 70 threshold for the traditional RSI, above the threshold here and briefly here. And so you can use these for exit definition. And to start off, I'll just show you how this is really applying the RSI in 3 different time frames, slightly different calculation formula. And to do so, we'll just go in to the chart here, and then you can add a SMA, smooth moving average is the formula that the Trader's Dynamic Index applies. SMA, and then instead of price, you use the RSI as input. And then the period is 13, and smoothing period is 2. Hit OK. And then for the fastest, the price line, we'll use a 2 period. Set this up as green, a little bit thicker to make it more visible. And we can put this on a new panel. The signal line is 7, and that would be in some red color. And put this down on the third panel. And here you see across above, downside, we can add the baseline as well. Find the SMA. And here you see the image is complete. We have the exact same plots. You can recreate the entire concept by simply adding a SMA and choosing the RSI as an input. You see the settings. RSI period here is 13, price, signal, band 2, 7, 34 respectively. And then we can continue this exercise by adding the Bollinger Bands and the threshold levels, but we already have that here in the Trader's Dynamic Index. So the purpose of this was simply to show you what a simple and basic concept this is in the background. So let's remove this and continue with our Bloodhound tutorial. I think what we'll start off with here is just a trend reading. The trend reading is baseline. And so if that is moving above 50, we have a bullish output. If it's below, we have a bearish output. And a lot of people would start off with a threshold solver for that. But if you have just one value, I think you can use just the comparison solver. Grab the Trader's Dynamic Index, choose the baseline, set a fixed value as input B, change it to 50, and there you go. Not much more to it than that. Here we see the baseline was above, the 50 line dropping below, and we have a downtrend. So the purpose then being to use that filter to validate the crosses. So let's just continue here with a crossover solver then. Add, and we'll use the classic TDI price versus signal line. Price line is input A. Signal line is input B. And here we start seeing some crosses. So by combining these two via a AND node, and we have filtered out some of the noise signals. This is without the trend filter. This is with the trend filter. So we see we are able to clean this up a little bit. Next, we're going to add the Bollinger breakouts. Use a crossover. Copy this. So input B, the upper Bollinger band for long and lower Bollinger band for short. And connect that in a OR node. We'll keep the trend bias intact. And like this, we should see a few additional signals. We have one breakout here that we didn't have before. So we can verify here. This is the Bollinger that I'm taking out and adding one breakout to the downside here. And so those are the basic signals used in the Traders Dynamic Index. And so next we'll consider some potential exit scenarios, use these threshold levels. So again, working with a crossover to define those. We can do it in the same way as we did the other crossovers here, but we'll work with a fixed value. Price, crossover, 68 threshold. Here with a fixed value, simply 68. And then on the lower end, it's the 32 threshold. Create a new logic for the exit. And connect them via a OR node. And then we'll discuss exactly what type of crossover we are using to define the exit scenario. So let's say we have a entry going up here. We're looking for a exit scenario. So we're seeing this threshold level is breached. So if we got in here or here, we would start considering exits at this point. Obviously, we want to deactivate the short signals. We just want to have the buy to cover. So let's go ahead and modify that first. So we're just looking for long signals and for the opposite short. And so what we see here now is a cross as we're moving out of oversold. Then we get out of the position. The alternative is to take the exit against the direction. Then we would get an exit signal when we're moving into oversold. So that is a decision for you to make, which one it is that you want to consider. Let's just make these consistent for now. In this example, it looks like we would have been better off getting out on the early end of things, so that when we're entering oversold. And if we go back a little bit, we can look at the long scenario. So we have a bunch of entries here, opportunities for pyramiding. And so the question is, are we going to use these exit signals just as we enter the overbought, or are we instead going to wait and delay the exit until we cross in the direction? And so here we see this would be a better fit to get out of the position when we're moving out of overbought again. A strong trend can continue for quite some time. And so in this case, we've set the solver to create the exit signal when we cross in direction, not against direction. And I think with that, I'm going to wrap up the presentation here. I hope you enjoyed the tutorial. If you have any questions, feel free to drop a line over at the contact form, lizardindicators.com. And you can also shoot me off an email at info@lizardindicators.com. Always happy to hear from you. In the meantime, take care and bye-bye.